What's up, guys? This is your midweek market update, and I got some great news for you. Well, it's not so great, but we are at a record high of inventory. Welcome to 30,000 listings on the MLS across the GTA. Yeah, that's a lot of inventory. So I talk a lot about inventory, so I wanted to kind of first of all break that down for you guys, because is all of that inventory really sellable? And has some of it already kind of sold, like sold conditionally, sold with conditions? I'm going to tell you about that right now. So basically, out of that 30,000 listings right now that are on the market, about 4% of those currently are sold conditionally, meaning that they have offers with conditions that need to still be fulfilled, okay? That is only just over 1,200 units, okay? Now, here's another thing. 30% of these listings, 30%, like basically 9,000, 10,000 of these listings have been on the market for 45 days or more, okay? 20% of these listings have actually been on the market for 60 days or more, and about 9% of these listings have been on the market for more than 90 days. Now, reason I'm telling you about this is that when I look at aging inventory, like 90 days on the market, I'm not saying they're not gonna sell, but how serious are they? So we've got about, 2,700 units that might not actually really be for sale unless they get a magical number. So the other ones are about 45 days on the market. Now these can go either way, but we've still got 9,000 of these things on the market right now that might not be sellable listings. So are we really dealing with around 20,000 listings? I don't know. I'm just trying to find the positive in all this inventory right now. But that's kind of the scoop on the inventory in terms of how it breaks down in terms of status. But what I'm going to share with you guys right now is that week over week, we've kind of seen a little bit more of a spike in inventory. So if we have my chart in here, you'll see I kind of color coded it where I'm showing you the greens and the yellows and stuff like that. And where you see that we kind of ramped up. And last week, I think it was like 2.1, 2.3. And so we were kind of showing for the last 4 weeks that we were kind of bringing on less and less inventory. But this week we had a bit of a spike in inventory, which was about 3.9%, 1,135 more units hit the market. So it is a bit of a spike in terms of inventory. Basically, last year right now, we had 47% less inventory on the market. Right now we have almost 9,600 more listings on the market compared to last year. But a very interesting point is that from January 1st of this year to today's date, we basically have 100% more inventory on the market. That's right, 100%. We've basically doubled the inventory from Jan 1 to today's date. And out of that, 122% of that new inventory is actually freehold. Most people would have thought it was going to be condo, but it's actually freehold. Condo has increased just over 79% in inventory, but basically doubled since the beginning of the year. So huge inventory positions that we have over here. In terms of sales, so we're still seeing, like compared to last year, year-to-date sales are still down 24%. And that's 22% in freehold and almost 28% in condo sales. And week over week, we actually did a little bit better. So we saw 11.8% increase versus last week in terms of sales. So our sales seems like they're starting to creep up a little bit. Is that kind of tied back to maybe some kind of settling happening over here? Like, okay, we're past the elections. There are starting to have talks with Trump, because that is one of the big things that I think is holding back our market right now, not having a trade agreement with the US. So are we kind of seeing a little bit more confidence from the buyers because some of these things are starting to kind of get ironed out, maybe? In terms of price, when I look at the 1 week price versus the 52-week price, we're basically still flat. This is a common thing that I've been reporting almost all year. It's been going down a tiny bit, but it's negligible at this point right now. So that was down about 0.4%, which is just over $4,000 on average selling price. Week over week, we actually saw it go up 1%. So that's about $10,700 on average selling price. There was one weird number week over week, which was York Region, and York Region was down like 8.7% or 113 grand. I'm not overly concerned about it because, like I told you guys before, this week over week doesn't really bother me unless we start to see a trend in that. How do I think we're going to kind of move forward from here? I think we're still going to kind of be stagnant. I think that one of the big things, like I mentioned, is that the trade agreement with the US, we saw when they kind of came up with, a relief for 90 days with China, we saw the US stock market go up as well. That added confidence there. So I think that, even though we may not get everything resolved, but some kind of a headway towards getting some type of an agreement might start to kind of settle the market a little bit. Carney put in his new cabinet yesterday, so hopefully these guys are going to start to go to work probably towards the end of the month, and I would hope that there's already talks going on with the U.S. With what's going on. But other than that, I think that in terms of interest rates, I still think that we'll probably see at least a quarter point come down on the next announcement and possibly another quarter after that. It's really hard to tell right now, but based on the numbers of unemployment coming out, I think that it's pretty much going to happen. At least another quarter point is going to happen in June. If you guys have any specific questions with what's going on or your specific area, because all of this data that I pull and I report to you guys, I got like bits of data for like almost every little pocket. So if you're curious about exactly what your pocket is doing, reach out to me, send me a DM, and I'll be happy to shoot you over some information. Have an awesome week.